Good morning, everyone. Well, this trend has been a grinder. I really thought it could pop. We still have some time to the end of the week. Maybe it will. But as I talked about earlier in the week about this pattern, being a bullish pattern and the consolidation up here at resistance, the red bar topping tail being ignored at all of that. And then, it rested again. And then we got this day that dipped down, and you can't fight the trend, but it's certainly what I'd call a self-correcting uptrend, which could mean distribution, whereas some controlled, very planned leaking of shares, so to speak, of just letting it out. And, we looked at the sentiment, which is, up to the moon already. And breath is getting close now. So we're going to, I think any additional strength, we're going to get that sell signal. So if today, the markets would pop to the upside, this breath is going to push up into this red area, and then we're going to have agreement between the two. So, we'll see. And so, yesterday was another dip and recovery. And started off the day to the upside, and the jobless claims. I don't know if that happened on the jobless claims. No, that was earlier in the overnight. And then, so I guess this is down on the jobless claims number. So whatever, the market's just reacting to every little thing. And so far, not in a big way. And so coming up close to the prior high. And, just historically, what would make the most sense before any meaningful correction would be for the markets, the S&P anyway, to make a new all-time high. And you say, well, why is that? And then the correction. Historically, that's just the way it is. And that's why we pay attention to the concept of a greater than 100% retracement. So this low down here, based on, well, that's a monthly chart. Let's go to the weekly chart. Just made a V bottom, Corona, everybody's going to die, run for the bunker, and maybe not, and, up and away. And we had that big correction bar, didn't follow through. So that's bullish. And so you can see that just the grind here over the last few weeks. So, a pop, maybe a bar like this, which maybe next week, popping above that high historically would just be, once it got above there, be like, okay, just count the days to a correction beginning. So what we would do is then, with a move like that, move down to the lower time frame being the daily, and look for some kind of a shakeout to the upside, some kind of bearish confirmation to the bias. So that's more or less the intermediate term plan as to the possibility of this continuing in this grinding uptrend. So similar to a picture like this, right? We just, we're picture traders, so to speak. We're price pattern traders. So when I say a confirmation of a pattern in a smaller time frame, in this case the daily, with the weekly popping up, something like this could be the picture, where you got a rally day, and then an inside day, that's going to continue to move higher, right? Since it comes out of a consolidation, and then it pops above the inside bar, and then boom, under, the wide range bar. So that's a short-term bearish pattern, even though this is grinding higher. Then you just see, well, all right, that wasn't a good reaction to a breakout. Now it's at support. What does it do? And it come right back up again, with the Mr. Schizophrenic type of price action? Or does it go sideways, which says, hey, this is support. Buyers are stepping up there. You can see that they are for the moment, but it can't lift off. So it spends a few bars going sideways here, and then it drops. So we'll see what today brings. So far, a break. Well, this isn't even a break of the trend. It's just a deep retracement. Here you've got breaks of trends in even the smaller time frames. And, as not that what this pre-market is about, but we always try and add a little bit of education to them. But what's going on in these smaller time frames is typically what takes out those that are trading in this time frame that should have their stop down here, and they stop out because of what's happening over here. And you shouldn't be paying attention to what's happening over here. And what's going on in between here is noise, right? Noise. As long as it doesn't come all down here, this is noise, right? So anyway, we'll paying into multiple time frames. It's rather a vast subject when you really get into it. So let's see what's happening in the other markets. Let's see, a couple of them are red a little bit. NASDAQ consolidating so far. Remember, we talked about this yesterday. I said the 50% mark of the wide range bar, and then we showed the minor support, and we looked at that, and we saw how it kind of lined up where it was starting to bottom out here. And overall, you got this rounding bottom here. So you had the pop, the deep retracement, and as long as it stays above this level intraday, well, you got to be thinking long, because you're not shorting at support, that's for sure. But if it breaks below here, well, that opens up the door to lower. But as long as it stays up here, even if it's another grinding kind of a day, which what I told you to expect the last few days this week, resting days or grinding days, it's what we've gotten. But as long as it stays up here, it's at resistance, it's still acting bullishly. Self-correcting uptrends are difficult unless you're just holding from lower prices. You're just hanging in there with them, but they make it especially difficult intraday because things tend to be whippy. So YM still struggling at that pivot high, and took out that low over here yesterday and came right back up again. So buyers are lurking down below on the dips. And the sellers are lurking just directly up above. So it's kind of the battle. The battle is going on there. And, let's just say the buyers and sellers are at each other's face at this point, and who's going to give it up? So we're waiting to see. Does this come back, from this morning dip that's occurred and start going sideways here, and that would lead us to a more bullish outcome to what's happening here versus, hey, if it goes back down here, remember they stepped up on the dip yesterday. They stepped up on the dip here. They're not going to keep stepping up on the dip if it keeps coming down, especially if you're looking bar by bar. The deeper this retraces into this bottoming tail bar, the less confident buyers are going to become. Right? Just think about it. Put yourself in there, in the bar. It's like, okay, you bought down here. You're feeling good. It popped up. Now it's going down. Not a big deal. It's at the top of the bar. And the deeper it comes, and the deeper it comes, and the deeper it comes, the more you're going to start thinking about hitting the bid, hitting that sell button. All right, Mr. Russell. This one has the potential to really pop, but it just cannot get going like everything else. And you see what it's doing here this morning. Just more garbage, grinding, whippy price action. But still, bullish on the daily time frame, wide range bar, sideways, up here, bottoming tail bar. But it's got to move. It's got to get moving, or buyers begin to lose confidence. Right? That's why I say a lot of times in the chat room, right? Even I get in a trade, and it's like, okay, as you'll hear me say, this is taking a bit too long. And sometimes it pops after that, or it gives it up. And the next comment, if it gets stopped out, will be, well, that went down because it didn't go up. And that's just the psychology of reading prices, where buyers, you get a pattern like this. Buyers are confident, and they say, that's going to go higher. And as time goes on, they're like, well, what the hell's going on here? And okay, it went up. Bottoming tail bar. All right, it's going to go up. Now, if this thing doesn't go up today, it's like something might be wrong. You got to keep an open mind, even though things at this point look like they could go higher. And so bonds here continue to grind, another self-correcting uptrend. And you see the resistance area here. And this is kind of something that's a concern, meaning as bonds are going up, interest rates are going down. And this is the 30-year. You can see it's going down here. We really don't want to see long-term interest rates going down. We know they're not going to go up much, but we'd like to see them stable to a little bit higher. And so this, the concern becomes, and it's really not much of one now because the way, the Fed pumped liquidity and so on and so forth, the yield curves are still pretty wide. But over time, if this continues to come down, and while that's nice if you want to refinance or borrow money, but if a lot of people were borrowing money, this wouldn't be going down. So at some point, we at least need to see this stabilize and stop grinding to the downside. It would become a problem. Oil. We talked about that bottoming tail, the topping tail bar, and then we got the inside bar. So now, just like it's not the same pattern, what I showed you earlier, that was a wide range bar closed at the high and then the inside bar, and it took out the low of the inside bar. So this is more of your classic pattern of a breakout bar failure. It hasn't failed yet, where the breakout bar ends with a topping tail or even a small topping tail and an inside bar. So if oil breaks down below that inside bar, that's going to be an early sell signal of, if you're long something like this and it breaks out and this pattern happens, it's better to step aside if it breaks down below the inside bar after a breakout, because it's not supposed to do that. As you know, it's supposed to keep going. So after all of this resting, this should not go below there. So something to think about. Breakout bar failures after a pattern like this, get out of the way. If it pops down and comes right back up again, you just get back in. Big deal. It costs you a commission. But if it keeps dropping, you have a whole bunch of people that said buy, buy, buy. And now they begin to question. And what happens most of the time in this kind of a situation is it pokes under the low, and you get a little bit of selling and it stabilizes because of the support. And then as it begins to deteriorate a bit, more and more longs say, you know what, something's really wrong here. And then, it's a pattern that could really, go to the downside and just cut through all of this support as if it wasn't there. All right, gold up a bit here, backed off, but, obviously still bullish. We've been talking about this for a long time. We started with the monthly chart long ago. Right, when it moved up, we got that little pullback pattern in the wide range bar. And so it just continued its bullish trend, backing off here a little bit. Silver was the big pop yesterday. And so now, it's going to rest a bit. Normal. It's come up and reached at least a short-term destination at this resistance area. So normal price action, especially after, jumping as far as this did, is normal to rest a little bit. Doesn't mean the trend is over. And our transports, where are they? Still holding up there. Everybody's just waiting. Waiting for what? Some news. I don't know. As I said, the patterns as we went into this week were bullish, and they just haven't been able to produce all that much yet. So we'll see how it all turns out. Anyway, today is Thursday. SPX levels will be tomorrow. All right. Hey, Greg, can you look at the defense industry? Defense. What is that? XAR? XAR. Aerospace and defense. Looks good. So in the letter, Regan, if you were reading the advisory letter a couple of weeks ago in the video where I go through the ETFs, I explained that this pattern, I think I explained it as an interesting one in that it didn't look like it could turn higher, but what I explained the strength of this and this retracement and how the lows were getting closer together. So the momentum Right? The momentum to the downside was slowing, and it was into this area of the unfilled gap. And I said, well, you know, this is still going down. And at the time, I said, this is a probable point where it could turn around. So as we look at price action, you say, well, all right. And I covered this in last week's letter, was that, okay, that's at resistance now. What's it going to do? The depth of retracement being, you know, about 90% or so was bullish. And now you got a red bar ignored, and it popped above it. So it's right here. You know, so it's at the, you know, the next little, I guess, inflection point. I don't know if it peekabooed above that high, but, you know, depending on the market is just kind of flat here today, maybe it, you know, can get going up to the next one. So let's just clean that up for a second. You know, one of the things is that you got tons of monthly charts that are sell setups that haven't triggered. So, you know, the big down move. So the daily charts are still constructive on a lot of them. And, you know, here's the weekly, you know, came down a lot, which I said came down a lot here, but you got this 180 bullish reversal there, and it's popping up. So that suggests it's going to move higher. Right? Hey, Tim, I got to let Dan take over. I can look at it really, really quick. I like it. I like it. Similar. I don't know if it's in that sector. I'm not familiar with this name, but you can see the pop up, a similar pattern of the lows getting closer together, and then this retracement. So it's similar to that aerospace and defense. And you can see the weekly. It looks almost the same. So I imagine it's in the sector, in that particular sector. Oh, there you go. All yours, Dan. Oh, internals, Tony. I covered them before. We still don't have the sell signal, but if you know, you can see the S&P chart. It looks like if it takes out that high, it should pop higher, and that's going to put, you know, should put the breath up into bearish territory, and we'll have a sell signal. That doesn't mean the market will turn on a dime. It was the same here. You know, we got the sell signal up here, and it came down, and it was a lot of chop. You know, so it was plenty of correction, but it was a real mess. You know, all yours, Dan.
All right, thank you. Ton of earnings. So we do have a lot of opens, but I don't see any problems anywhere. So I'm going to go, I tighten the stop on our Spider and Home Depot bull call debit spreads. But let's just go through. I got a huge list. So this OMF, yeah, I'll keep an eye on it. AutoNation, gap's too big, but bullish gap, of course. CNTG 1418. I don't know, day trade maybe. I just saw this little guy. I remember it's in the blockchain and had a nice breakout here in May. And it's been consolidating, and the weekly and monthly still look good. So that's worth watching. The old Riot, FNF. We entered yesterday into the close. Beautiful, beautiful. I had to write myself a note on that late day breakout. That was beautiful. Beautiful late day breakout. So we bought the stock. I see one print up here. We'll see. You know, actually pre-market, I went low offer at 33.90. That would have been amazing if that print was me. 60% business closes are now permanent. Yeah, I was you know, mentioning some Wall Street Journal data yesterday. They said 25,000 restaurants have closed in the U.S. during Corona. BNTX, it's a virus stock, 97. So this is a very bearish reversal, bearish pre-market. This could be a call spread candidate if you're so inclined on, you know, fading strong stock in the virus sector. Plexus, you're a total mess. You're gone. Nitker, it's gapping up, no pattern. Lester, no pattern, but maybe under yesterday's low, a call spread for tomorrow if there's any juice. Down. Earnings gapping down. I don't know, that's an ugly wide range bar. If it opened flat or up a few pennies, then that would have been a beautiful continuation long. Daily, weekly. Well, we'll come back to it. CSX looks like it's gapping down a little. We'll come back. There's not much volume. Slim Shady down a little bit, no pattern. HNI, I don't see any prints. DFS 5019, so down a little bit. So if it can negate this gap and trade above yesterday's high, then I like it. Daily, weekly. So I like the fact that it's gapping down. Yeah, I like that. In fact, I'm going to put him up here. I had this GoDaddy there. Let's watch GoDaddy for a short under yesterday's low. That looks good. It's on support, of course, but bearish consolidation. This is kind of a reverse head and shoulders. Can't tell where it's opening, but that's worth watching. Banner, it's showing up 250, but I see no prints. So if I don't see prints, I don't trust it. Let's just move on. KMI 1440, bearish gap at rangebound. McGraw, possible condor. LVS is weak. We've been saying we looked at the casinos yesterday and in the junk sectors and MT Live, and we didn't. The only one we liked, which we actually got into, was Penn. Not a single one in that sector did we like. McGraw KMI. It's gapping down here to 1440. So you got support below, resistance. Just an idea. Wow, MTH, housing stock up $7. That was a bullish chart too. Housing was on fire yesterday. The ITB sector, look at that. Right out of the gate. I watched 30, 15-minute sectors, and I just glanced up yesterday morning, and that was pretty darn obvious. And that was helping our Home Depot, housing stocks, etc. RCL down a little bit. It's a mess. NCLH, we actually day trade shorted this in addition to buying a $14 put. This is the worst looking of the three big cruise ships. Looks horrible. Upside shakeout, that's a breakout failure. Price void, looks horrible. Wells Fargo, we had this posted yesterday as a put spread over the high. It did not trigger, but I also like it long. Just buy the stock if it trades over the highs. I like it better now that it's gapping down, because then it's not going to trigger if the stock and or market stay weak. NS, that's a 1, 2, 3. That looks good. CNTG, we saw that already. WBS. It's a 1, 2, 3, but there's no price void. You're gone. WSO, you're extended. Can't tell where you're gapping. But let's say hypothetically this gap's up $10. Gap's up $10, then sure. Yeah, I haven't gotten to Microsoft. There's so many gappers here today. Yeah, it's gapping under that consolidation. It'd be a definite call spread watch. 15-minute low. Tesla, another big one, gapping up. I don't know what to do with this. Tesla. I got all my things that I watch all day. We'll keep an eye on it. WST, I see one print up here. Also, if this were gapping up huge, then 30-minute low would be a call spread. This is gapping down 175.50. So McGraw, here's another Condor candidate. Resistance above with the bearish gap. Look at that, 3 times of support That would have been a great put spread on this day right here, 714. Beautiful, beautiful put spread right there. Like no brainer. I mean, you got the moving averages, you got the beautiful pivots. Gang of WNDW. $5. I'll put it in the list. You know, it's still too extended here, but yeah, I'll throw it on the list. All right, Twitter. Twitter was up $2 earlier. Now it's a mess. William Jimenez asking about AMD. I mean, you're fighting strength, so that's not our style. I'd rather short weakness. And there's no bearish setup even for a day trade on the 15. None. I mean, it's still holding like a tank so far. TTM, Tata Motors. I don't like trading those little gappy ADRs. Wow, look at those moving averages, the 20 and the 50. That's what we call railroad. Railroad, parallel, rising, strong angle. That is a sign of an amazing trend. Wow. Traveler, yeah, over the consolidation is fine. Market's still weakening, questionable here, so it's going to be another morning where I'm not doing anything out of the gate. Dave's asking about APT and Labu. APT, we were watching it this igniting day. I don't like chasing things that are far from the 20. And you know, you got multiple big bars. So you missed your ideal entry. If it did set up, you know, day trade on the 15 would be fine. Labu, absolutely no pattern. It is in an uptrend, higher highs, higher lows, but it came down hard 2 days ago. It's just, you know, maybe over yesterday's high could be a day trade, but it's just not quality. McGraw, Roku out of the money put spread. It may be McGraw, but it's going to depend on what the broader market does. If the markets are weak, then no more longs for me. That's for sure. Shiraz, that's off to the races. No, the gap's way too big. Yeah, that must be a bio. Has to be a bio, is my guess, but no, it left the station. RHHBY for Scott. But it's gapping down though. So it's not a long core. If it weren't gapping down, then I'd say sure. I mean, it trades very spotty. You would have to give it a big stop, but you know, today it's gapping down. T, no pattern, you're gone. Tehran, that's going to be a C. BAC. I like, you know, you got this prior resistance here. Tehran, I like WFC substantially better if it takes out yesterday's high. So much better pattern there. No pattern here. In fact, if it trades under all this, then it could turn into a short. Yeah, no longs for me unless something is a beautiful gapper on its own page. But yeah, as the general rule, no longs right now. Let's let things settle down. I posted a call spread on this yesterday, but then, you know, when it started to rally with the market here, I canceled it. Still an idea. We'll keep an eye on Amazon call spread for tomorrow. Solo, 30-minute high, keep an eye on it for us. Keep an eye on it. That would be the place. So keep an eye on it, please. Yeah, I mean, that would be where the turn is. All right, DF.